Hi everyone, and welcome along today to Meet Your Trading Experts with myself. I'm Paul Bottrell, head of the Online Trading Profits and Actions to Wealth trading team. My guest today is Ray. Ray is a trader in Seasonality, and we'll be coming to him reasonably soon to understand how seasonality allows him to pick a direction and to trade different products only in that direction, and the edge that gives him in the market. Hey, Soon, how you doing? Hi everybody. Welcome along. It's good to have your company on this Thursday night, just past midnight in New Zealand, just rolling into a quiet Friday morning back in New Zealand. Welcome along, everybody. If you're on YouTube, if you're on Facebook, then feel free to ask any questions into those platforms. And Maya will keep an eye on them, and she will pass those questions through to myself and Ray. And for those of you in the webinar today, if you can just put them in the chat box, we will get back to you. Look, we're going to start off today, as always for the show. I'm going to jump into the market review. Before I do, I'm going to ask you guys for some help. Those in the room, do you guys prefer this background, or do you prefer this background? That's what we're having a look at for New Opportunities Expo. And I'm going to go to this one for a little while. I'm going to go back in a little while. I like the other one more, I think. But if you have a strong preference for the background, do let us know which one you think is better. Hey, Andersley, how you doing? Anderson, nice to have you along. Good to have you with us. Nice to have always a great mix in this room of people from Actions to Wealth and Online Trading Profits, and a bunch of different people coming in as well. Look, I'm going to get straight into having a look at some charts. Interesting time for mine. Not a great time to be looking at charts in my view. The market hasn't really done what we hoped, and the hope was, last week we had all that news and it was going to do this. That news would push it in a direction, and with no news this week, it would just keep going in that direction. FTSE, quite an exceptional chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive days up, straight through the 200-day moving average, and look, it did test it and pull back one day and go straight through the next day. But that is an aggressive break of a 200-day moving average on a horizontal level. It does suggest to me it's got a little while to go yet. Although today's bar, again, interesting for mine that this has been a time where we've seen quite a lot of gaps. And we saw a close here and an open there. And here, close here, open there. And we see a close here and an open there. Lots of gaps, which is interesting. Even in the FTSE, I wouldn't expect that to be quite as prevalent in a week. Interesting time, and certainly the FTSE is having a bit of a break, and I'm not surprised. It's been running uphill non-stop for 10 days, and it's taking a breather, and we'll see where it goes from here. For me, I'll be looking for a pullback down to this level, and then a continuation as far as direction goes. Getting a long way away from these pivots. We're a long way away from monthly pivot and weekly pivot. You have a look at the gap here between monthly pivot and 600, 640, $700. And look, if you have a look around here, it just doesn't get a long way away from its monthly pivot. Stretch down here a little bit, but nothing like this. And I don't think it likes being there, and I think there will be some gravity effects as it tries to get back towards it. And still for mine, there's some real sentiment here, and I would say I'm looking for a pullback to here. Some decisions around here, but really I'm looking for a bounce and continuation. A break below would suggest me won't be coming back and having a look at levels around here. Bitcoin, I'm on the weekly. I'll come out to the daily chart for Bitcoin. Just got to get my my pictures from Zoom out of the way. Let's put them down here. And again, Bitcoin, the big breakout around election time, and really is consolidating. We talked a little bit about this bar here. I always like this when I see a bar like this. I don't know. When you start seeing price start to sort of settle around this, the top and bottom of this bar seems to set up the range to me. And as long as we're inside the top and bottom, the high and the low of this bar here, I'll be range trading this. And I'll be looking for a break of that bar in either direction to give me sentiment moving forward. Now, I've got to move in pictures again because they were now in another wrong place. NASDAQ, well, again, big break around election, but really no follow through here at all. We did talk about this, and I do like this. I talked the other day about going to the target here was going to be the top of the bodies of these candles and not the wicks, and we got there beautifully, and we pulled back as we said we might, and look, it does look a little bit untidy to me. Technically, technically, I think it's a bit of a mess personally. You can trade this as a bounce off a horizontal level and look to get back up here. But personally, I want to see this picture get a lot clearer before my money goes into it. S&P, a bit like the FTSE, saw the big move up, and this thing did, that spike there did smash through the levels. But another one that got the highs to the high of the candle body and not the wick, and is now consolidating. And again, I feel like we've just got to be patient here. We get a break and a clear close above this level. People looking for new highs, and I'd expect we'll pop up a little bit. And on the other hand, if we were to pull back here and get a lower high, then I'll be starting to look for a bit of a pullback on this. There's another really big move. And, if this thing even pulled back on a fib, 23.6, it's still a decent chunk on the way back on that. Oil's one that we've had a lot of luck with recently. We've talked a lot about this range, and this range is the gap from February, this gap here. And oil has been sort of hanging around in the gap for quite a while now, and has come back and tested the top of it again and put in a high test bar. And we're going to get this little breakdown, and we thought we might be going a bit short with our target down here. But, I'm not as convinced in this. This looks like it's going to come back in the range and come down here. But really, for me, long-term, I'm a bit bullish on oil, so I'll be a little bit careful of this. It's been, I said the other day, I wasn't convinced in the direction of oil, and it's put into, pretty aggressive buying bars here. So I'm pretty keen to see it become a little bit clearer to me. Again, a close above this level here would be heading up towards here, and some follow through. So if we got the buying bar, the high test bar, the selling bar, that would interest me in starting to come back down here. But I'd wait for this bar to form before I got involved too heavily in it. Euro dollar reminds me a bit of the Nasdaq, to be honest. For mine, it's pretty messy, and we've extended the range. We're in a range with the bottom of it down around here. But now we've had a couple of cracks down here. I think this becomes the bottom of the range. And really, for me, I'm looking for price to come back and test this 100-day moving average again, and then look for a bounce up, or to get to the top of this range and to make a decision, either bounce and give me a run down, or close above on a 4-hour daily chart, and I'd be prepared to start looking up on euro dollar. For me, I'm not very interested in this middle area. Doesn't do much for me at all as far as direction goes, and I'll be hanging well out of it. Dollar yen, boy, what a day this was. We saw the spike down after the election, and it looked like we were going to see, big move down in dollar yen, and boy, it just came pummeling back up. And we will watch this with some interest. Look, we've seen an inside bar here, another really indecision bar at the top here. Another indecision bar starting to form here, and look, for mine again, it's similar type stuff for me, really. If we got back down to monthly pivot and bounced, I'd be interested in the long. If we got back below monthly pivot and closed below on a 4-hour daily chart, I might be looking at this area here, and above yesterday's bar would start to get me a little bit interested in the long. And my basic bias here probably is long. I quite like dollar yen to the long side, but I need to see a little bit more follow through than this before I'd be convinced that I should be in that. What I really want is to see not just follow through up. I want to see is a genuine retracement to a level and then go. This sort of sitting around here, it doesn't convince me that there's much left in this. And we've got gold, and look, all I've got on this is what a mess. After the election, the pop up, we get up here, and everyone's saying, this has got to go to 2,000. That's where it's heading. Da da da. And it just turns around and bangs down 100 odd bucks, and then again puts in inside bar, basically almost another inside bar, still inside it here. And to be honest, technically I've got no idea. Ray, did you get long on gold?
Can we join out? Good morning, everybody, or good evening to you guys. Good morning here from quite a sunny Belfast, actually.
Mate,
Belfast.
Have you noted it down?
The one sunny day in November.
Sunny day. Yep. We've got it sorted.
I might go and play some golf. Gold is an interesting one, Paul. I had no bias to be long. I had no reason to be long. I've been looking to get short. The field breakout was actually a real nice way to get short. Same with dollar yen, the failed breakout. That both of them were set up to do that. The characteristics of them, they're quite fond of doing that, having failed breakouts, which is a signal to go the direction that you really want to go in. So both those markets played out quite well. The conditions aren't in play at the moment for gold to rally. There's no buying in there. The seasonal bias is still short. There's just the conditions can change. Certainly, if certain things happen within a market, but at the moment there isn't the conditions there for a sustained rally in gold. I do see it coming, but not at the moment.
When you say the seasonals are short on gold, how long are they short for?
Pretty much since about the middle of September through till either latter part of November, most likely the early part of December is when we start to get the real sort of seasonal sweet spot for gold. So the bias would be short. I would be short for another couple of weeks. At that point, I'll be looking for a change in the conditions. One of the major negative elements to it at the moment is the wrong people are long on gold. The only people that are buying gold in here at the moment is the little guy.
And you've picked it up from COT data, right? You've had a look at the
equipment of traders. We can see who's the buyers and the sellers, and the only people that have been doing the buying is the little guy. And historically, they're always wrong. There's no big money coming in. The vast majority of big money is either leaving gold and has been leaving gold consistently through this period, or it's actually adding into the short side. The only buy interest is from the little guy, and I say that's historically is a really negative thing. They will typically get flushed out, so the market will do what it's done here, fake to the upside, bring more little guys in, and actually then but go in the direction it really wants to go, which is down, where the big money will come in most likely around maybe 1750. Maybe 1700 even, where you'll start to see an accumulation by the real people that can take this up. But at the moment, the conditions say when you see a market that's only been bought by the little guy, that's a big negative.
Mate, there'll be a few little guys watching this quite ruefully. So,
technically, I'm a little guy as well, but so I'm not being disrespectful to anybody. It's just
we are. So what we're saying here, Ray, is that even though you saw this going up, your seasonal bias is short, so you didn't get conned into the long, and you positioned yourself for the short.
Yes, it's something I actually like to see in terms of wanting to be short. I love to see a failed breakout. Say dollar yen was probably the clearest example. It was a real nice level at 104, which you had marked in your charts. And it is quite characteristic with how it moves is you'll see that fake move to the downside and will instantly flip round. And I will actually plan for that type of price action. And exactly the same here with gold.
So the little guys buy it and get smashed, and the seasonal guys sell it at a good price.
Yes, and you use the rally or the break here on gold as actually the trigger. This is where we're going to get the turnaround. You obviously need to wait and time it. But whenever we had the big smash day up through 1920 on gold, the fact that we stopped dead the day after, that's the classic sign. Gold, whenever it breaks, it doesn't do that. It'll just keep going. It doesn't stop dead. As soon as it did, that was your cue to start looking for your shorts. It was in the plan anyway. It was to be short, but obviously you need to time that. You need to look for the efficient entry into it. Say the day that it stopped dead in its tracks was the cue to start looking for those short entries.
Nice, mate. Nice. I think a lot of us looked at the long. But I've got a couple of questions coming in. Fed on YouTube's asking, are the seasonals for silver similar to gold?
Yes, very, very similar. Similar across a lot of the metals, but silver and gold very, very closely aligned with each other. Yeah, there's some periods through the year actually where silver will outperform gold, and it's certain times you will favor one over the other, but the pattern will be very similar. Yes.
Nice, mate. Nice. So, mate, I remember you trading in the early days in the trading floor in London, and you were another guy. You were looking at chart patterns and strategies, and doing the same as everybody else. What drove you to seasonals? What was the reason that you headed down the seasonal path?
Losing trades. uh, and trying to filter out. Obviously, we all have losing trades, and that's just the nature of it. But whatever I was started trading, predominantly what I actually started trading UK stocks, FTSE 100 stocks, FTSE 250, even looking at quite a large spectrum, a large number, and I was massively over trading in my early days. I would have a list.
As we all were, right? Every single one of us looks back and wonders what the heck we were doing in those days, right?
Well, to my defense, I didn't actually know I was over trading because I didn't know what was right, what was wrong. So I was just trading. I didn't know any different, to be fair. So it was just very early days. But whenever I had a list, you have a list of stocks, might be 40 or 50 on a watch list from week to week. And I could have been placing anything between maybe 7 and 10 orders every day. Trading end of day on the stocks, but placing maybe 7 or 10 orders a day. And I just got no consistency. I didn't go up, I didn't go down, didn't wipe out an account. I think the law of averages, if I just place enough trades, I'll have as many winners as I'll have losers, is pretty much what I did at the early days. But I just couldn't understand, looking at two charts that look exactly the same, or to me, they looked exactly the same. And one would do what I wanted to do and the other one wouldn't. And over time, you sort of wonder why did this one do it and this one didn't. And eventually it came about, especially looking at stocks, started to break stocks down by a sector, which seems like a really simple thing now, but I hadn't considered that. I was just looking at all stocks. And then discovered that different sectors have different seasonal influences. Different sectors are more in demand, say, in the lead up to Christmas, and other sectors are more demand during the summer periods and things like that. So that was new information, and it made sense, obviously, if I want to be a buyer of a certain group of stocks or a certain sector of stocks. Makes sense to be a buyer whenever they are being bought. So if it's a run up to Christmas or if it is the summer, then I would focus on those ones. So it made me filter out and focus on the higher probability trades. So instead of placing 7 to 10 orders a day, I'd maybe only place 3, 4, or 5 a day. I was even high numbers in the early days. I wanted to get that down. But it was just all trying to hone in. After a while, I knew 10 orders a day was too many. And your watch list of 50 stocks was every week was too many. So how do you filter that down? And so I've just continued with that process. When I moved into Forex, I did the same with Forex and commodities as well, and it just allows me to filter out, stops me getting faked into premature trades or the wrong directions and things like that. And allows me then to have a plan.
Great, mate. Look, we'll come back and do a question in a minute. But before we do, I thought I might ask you, so for our people at home, I think one of the things I remember as a learner trader, first of all, we all go through that stage where we trade too much and we stay at break even, lose a few dollars, and it's so frustrating because you try so hard. And trades that should win mysteriously lose, and trades you don't think are so good mysteriously win, and you're just wondering, what it is. And I think this is where the bias thing comes in, where you just got to find something that gives you a bias to understand in the market, and seasonality is one of those. But if I ask you to define seasonality for our people, what is seasonality?
Seasonality is it's a record of what a market has done over time. So seasonality is a term that's given. It's probably not the accurate term because we use it in financial markets, and obviously, the pound isn't seasonal. It'd be wrong to say that it is seasonal. It has seasonal influences, but obviously the pound isn't. It doesn't matter if it's raining outside or not. But if you just think of it being it's the historical record of what any market has done. Any market will always have patterns and repeating patterns where it has a more likely to go up or down at certain periods of the year, more likely to range at certain periods of the year. And it's just understanding supply and demand as opposed to actually seasonal influences. It's that record of the supply and demand for that market. And a lot of those supply and demand influences are repeatable. They happen at the same periods every year. And that's what causes what we call seasonal patterns.
Thank you for that, Ray. I think that is really, really nice. And I think I like the word seasonal because it isn't the same, but it's the same idea, isn't it? That in a year, the same thing happens each year consecutively, often. And lots of questions for you about seasonality. How do you plan entry for seasonal trades and exits as well, please?
How do we plan entry and exit? Well, that still comes down to my strategy, how I trade. Like, here's an example. Like, it's okay having it on gold here. It's okay having a plan, having a seasonal bias, but you have to look at how the market's moving, what sort of price action we have. Like, I won't have a rule where every time I want to get short on a seasonal move, I have to look for a field breakout to the upside and then get short the following day. Yeah, that's your strategy will tell me where I want to get in. In the case of gold, a field breakout is it's a pattern I like to trade. Some other people may not. They may want to wait till the market actually starts a trend. So once the downtrend is formed, they were simply just looking for trend continuation and use trend entries. So you don't. I think it'd be wrong to say there's a seasonal strategy. You can continue to trade exactly the same way you've always traded, and there's loads of different ways to trade. But what the seasonal bias does, or what the seasonal charts give you, is you understand what the market's going to try to do in the future, rather than just looking at a price chart which stops right now. You think there's nothing else to the right of where your cursor is. There's nothing else. There's nothing there. The seasonal chart continues. It gives you that bias of what the chart is going to at least try to do. Then you can interpret price action. You can anticipate the price action, and you can look for your entry. But say in terms of strategy, I will happily trade a field breakout entry like this. I will trade trend entries into it. I'll trade limit orders off support or resistance. So there isn't one way to enter a seasonal move, and I wouldn't change your trading just to incorporate seasonal charts. I would develop what you've got and just get better with it. Hopefully, it will filter out some of the losing trades. But it doesn't need to completely, reconstruct your whole trading plan just to take a seasonal trade.
Well, I'm just going to check on your. I'm not sure how your accent is going to go across on the word failed. So it's a failed breakout. Failed breakout. I mean, I say it as a New Zealander, so I don't say, but it sounds like it's a field, and it's a field breakout. And I'm just making sure that people. So it's a breakout that doesn't continue in reverse. It's a breakout that hesitates. So. We saw a breakout of our range. Okay, we've got some great questions coming in. We've got the same question coming in a couple of times right now, and I want to ask you of it. I had another question I was going to ask you first. Oh, mate, so there's different ways you can get. We'll come back to these questions not too far away, and thanks for putting them in, everybody. Always great to get lots of great questions, guys. Ray, so what we're saying here is that what I tell our guys is bias comes first, and you can use seasonals, you can use COT, you can use news, fundamentals if you like. You can use technical patterns, but I think you're already trading technical patterns and using technical patterns to confirm technical patterns. I don't think it's quite as good as using technical patterns to confirm seasonal bias or COT bias or fundamental bias. But you don't use all of these at the same time, right? You don't follow the news so much. You're not quite so fundamentally based. Seasonality and COT give you your biases, right?
Yes, absolutely. It's what makes sense to me. What resonates with me. You mentioned there the chart patterns. Chart patterns, I will absolutely trade. It's this it's the movement of the market. It allows you to see and time the entries in. But having a bias allows me to anticipate what type of chart pattern I'll expect to see, whether it be maybe a head and shoulders pattern. I would rather anticipate and expect a head and shoulders pattern rather than go, oh, there's a head and shoulders pattern, I must get short or long. Because a lot of people will say, well, some patterns don't work or don't work all the time. I think if you're not anticipating how you expect them, what type of structure you should be getting on the chart, if you're not anticipating that, and you're just reacting to it, then you leave yourself open that the market doesn't do or the pattern doesn't do what you expect it to do. So if I'm anticipating a reversal and I get a head and shoulders, I've been anticipating that. That's in line with what I'm looking for. It's more likely to play out like that. Same with a breakout in gold. If I was anticipating a bullish run on gold, I'd have been all over buying that on a breakout, and it most likely would have been an actual breakout. Because the conditions are still there to be short, it was most likely to be a field breakout, and therefore you plan for that, anticipate that, and then actually not get sucked in the wrong way. So I think it's really important to have a bias and understanding what a market's going to try to do, and that was the biggest change to what I did from my trading. Is just looking at the chart and just where it stops right now, trying to work out right, it's going to go up, down, or sideways. That's hard. That is hard.
So in the promotion for this, I spoke about when I was in Copenhagen. Leon Ho, the guy from Nordea Bank, he used to tell me all the time that retail traders trade in the dark, and I honestly had no idea what he meant. And I used to nod and go, "Yeah, of course, man. Yeah, right." And thinking to myself, I must work out what the hell he's talking about at some stage, But this is what he's talking about: is that retail traders see a chart pattern and think it means something, and they don't understand the context of what they're looking at. In fact, retail traders it's not uncommon for retail traders to try and make a trading decision based on 2 bars, and really context, be it technical context or be it seasonal, you need more context than that to be able to make a decision and get a direction, right? Literally, seasonality, it turns the lights on for your trading. It gives you a way and a direction to trade, right?
Yes, absolutely. Obviously, you can get to the point where you're not just reading the last 2 bars. If you're a technical trader and you're really comfortable being a technical trader, and you develop and you become really good at it, I know traders that do that. But for me, it makes a lot more sense. Yes, I can read the chart, I can read price action, I can see the emotions that are on the chart and what the influences that are in there. But I still feel a lot more comfortable having an understanding of what what price action I should be expecting, what is the near future hold for a market. Then I plan for a certain price action actually develop. I talked through some of my some clients last week actually, and this is one scenario I talked through. I said a really nice signal to get short on gold will be for a move from up through 1920, somewhere up to around 1980, and actually then look to get short, because that would most likely be a field move, because the bias is still short, the conditions aren't there for the rally, the little guy's the only one that's still buying, and they will buy more as we break through 1920. So by looking at the chart on its own, I don't have that information. I just don't have that information. So I'm much more comfortable that I do have the information, then I can plan around it and actually anticipate a break to the upside, which is actually unlikely to follow through and will get short again. I'm going to say with the chart just does not tell me that.
Mate, got a couple of people asking this. I think it's a great question. Basically, between the 2 questions, they're saying, does the vaccine, COVID, and the elections change the seasonals?
The vaccine, no. No. The election, no. Actually, no to all of that. No to all of that. My plan before the election was equities would go up regardless of who won. The only variance would be on dollar. It would be a different influence depending on the outcome, and the outcome that we've had pretty much would leave it range bound, which is still done. I expected yen to get weak. I expected gold to go down. I expected bonds to go down, and that's what we've done. So no would be the simple answer. When you understand the context of how markets move, when they typically move, a lot of it's a lot more predictable than what you maybe understand.
Yeah, I think it's a really good point. And one of the things, isn't it, that there's a lot of stuff, Ray, that's just noise, right? And people get all excited about it. But it was really interesting, wasn't it, that no matter who won the election, the stock markets are going to go in the same direction. You kind of wonder why they didn't go that way a little bit before the election. It was, well, I guess they did go that way before the election, but really, it was hard to see an outcome that was going to take them anywhere else, right?
Yeah. No, so I haven't, the plan hasn't changed for me this last 3 or 4 weeks. Everything's still been as we've planned, I haven't changed and said, okay, we were going to sell this, let's buy it now. There hasn't been any of that. And that happens. I've nothing wrong with that. If gold was a true breakout, conditions change and people turn bullish, I'm not going to sit there and go, well, I'm going to keep selling it. That's I'm not stupid. I want to make money here, but you can't just instantly just change like that just because the one candle is maybe not the right shape or the right color. You have a plan and stick to it until such times that it's not, then that plan doesn't work anymore. But no, the virus or the vaccine hasn't changed anything at all. That's just noise. Nothing's really happened. They've just said that they've got some results, but that was just noise.
Yeah, look, honestly, fascinating, Ray. In my life, I've had a number of vaccines, and I expect them to be 100% successful. In fact, if you told me I was taking my kids down for a measles vaccination that was 90% successful, I'd be like, you're kidding me, right? This thing's supposed to work. And yet they can say a COVID vaccine 90% successful, and there's a massive celebration in the world. And it's like, that's not even very good for a vaccine, right? That's not a number that I think would even be in line with the expectation of the pharmaceutical company. They would have been expecting a higher number than that, but boy.
I was surprised to learn that actually most other vaccines are nowhere near even 90. So I was surprised by that.
Really?
Yes, I was surprised. Quite a few there were in the 60s and 70s. I think the flu vaccine, the normal seasonal flu vaccine, is about 50%, 50, 55.
Oh, yeah, I think when you say that, Ray, that's because different strains of flu come in, right?
Yeah, but there was a few others, and I think they were only around 70% effective. And I was like, okay, fair enough.
I'm never leaving the house again. I'm staying here. Mate, a couple more questions. I've got a couple more for you, but before we get into them from the team, from FAD, usually when it ranges are the times when the little guys are in the trades. Is that true?
Say that again, sorry.
What he's saying, I'm just going to paraphrase a little bit, is usually when it ranges, is that because the little guys are in the market?
It would be true to say that during ranges, the big guy loses interest. Yes, generally would lose interest. So if you were looking on COT and we're in a prolonged period of a market range, you would see the large money leaving that market. So it'd be probably accurate to say the little guy's more excited by it than the big guy.
Hey, seasonality for gold right now is short, right?
Yes.
Great. Look, this is a question more for me. This is slightly contradicting for us, Paul. Can you please help? And the other day you mentioned that it's not a good idea to make a bias first and look for charts which confirm it. And look, I think there's a real difference what we're talking about here. I've been talking for about 18 months about the need to have a tool that gives you a bias going into the market. And that's a really strong thing. But that tool is not your opinion. Deciding that you think that gold's going to go up or down and then going to try and trade it to make it, as if that's a fact, is not going to help your Helen. December is definitely long for gold. So when we talk about that, there's a real difference between having if you like, I'm going to call it scientific bias and having an opinion bias. Just going and having, having thoughts on the market and going to try to trade them is not a very successful way of doing things. But having some fact base to give you a bias in the market makes a big difference. I hope that helps clear it up. And I'm sorry, these days I spend a bit of time on YouTube and social media. I can't remember exactly where I was and when I said that, but I don't think it'll be in the context of this. I'm a big fan of having a bias. Look, honestly, I think it's really hard to believe that. I find it really hard to want to trade without having a bias for the market in the first place. I really like this sort of stuff. For November short and December short too, I think that it's look, you guys have all seen Ainsley's trade, the gold trade from last year, which was a seasonal trade, a mid-December, late December buy, holding it through till, well, you can hold it through to late February, March, isn't it, for the run on gold, Ray?
Sweet spot towards the sort of middle part of Feb. Some years we can run a bit further through, but yeah, generally sort of into that February period, starting historically around the 10th to 12th of December is typically but I would never just wake up on the 10th of December and just start buying. But that's sort of usually the date. It could be a few days either side, but that's sweet spot.
And this is what we're saying, isn't it, Ray? It's not the seasonality for gold goes up on the 10th of December, so you buy gold. What we're saying is at that point you create a bias and you look for good opportunities to buy gold. You don't just go and buy. You've got to go and find the right opportunity.
I get emails all the time, and that's the misconception or the misunderstanding of seasonality or the seasonal patterns. You know, gold's supposed to be going down. Why is it going up? Or gold's supposed to be going up. Why is it going down? And you got to understand how the pattern should play out. You know, and you got to take the current price action into consideration. You got to take the current trend into consideration. You know, if the market is in a really strong uptrend, but we're anticipating seasonal weakness, then that seasonal weakness may just transpire to be less buying during this really bullish market that we've got. Because if we just followed the same pattern over and over, the market would do the same thing. We would never have uptrends or downtrends. You know, so people lose the context of what we've actually got. And one thing to consider is very much the price action and the current trend and the structure we have on that chart. And that'll have an influence on how strong the seasonal move is, whether we do have a strong rally or a strong decline. And we've got to take that into consideration. But when you do that and you can anticipate the price action and explain the price action that we've got, then it's a case of using that price action to get your entry. And I say with gold, generally it's sort of around the sweet spot around 10th to 12th of December.
Mate, so how long have you traded seasonality? How long has it been you've actually used this as a base for your trading?
It's crazy how long I've been actually looking at charts, but it's probably around 12, 13 years whenever I first discovered seasonality. I just used to look at, seasonal charts online, the early years, which some of the charts were really, really basic. They didn't have much data. It was only really a few years after that I started being the nerd that I am, downloading my own data into Excel and creating my own seasonal charts and doing my own seasonal studies and, making sure I had more historical data, which wasn't that easy to get 10 years ago. So it took a bit of time, but I would say probably the last 8 years I've been creating my own seasonal charts, and I still do, and I still look to develop them and test them and test them to make sure the seasonal patterns are still working and things like that. So yeah, I'm doing it for a while.
Right. So if you're new to trading, if this is something where you've just started out and you're you're on the journey, you're already having to learn about chart patterns and strategies and all this. How difficult is it to understand a seasonal chart?
If you've got to the point where you understand the things that you just mentioned there already, like chart patterns and price action, and you understand your strategies, then it's really easy to implement something like seasonal charts and to give you a bias. If you're still at the point where you're making a trading decision, as you said earlier, on the last 2 bars on a chart, if that's what your trading decision is based on, then you're not going to be able to use seasonality. You got to understand price action a lot better. Got to understand market structure because say once you've got the bias, you got to then anticipate how a market's going to move. Will we see like a double bottom, or we expect a higher low, or what the price action is actually showing you just trying to do. Once you've been able to do that, then you can add in seasonality really, really easily.
Mate, Fad is asking, is it usually spot on for seasonality reports? I think he's asking how accurate they are. So that might have been my next question, actually.
How accurate are seasonal charts?
Yeah.
100% accurate.
Okay. But that's a trick answer. That's a trick answer.
No, because it's a question. If you got to understand what they are. As I said at the start, seasonality is it's a historical record of what a market has done. So is it a historical record of what the market has done? Absolutely, 100%. Does it tell you what the market's going to do next week? Absolutely not. So that's where the misunderstanding comes in of what, in terms of how accurate is it. A market will not do the same thing every year on the same day every year. I would never expect it to do the same thing every year. So if you think of accuracy in those ways, does it do the same thing all the time? then that you're thinking of it incorrectly. I would never look at it like that. I would look at it the bias. If gold was going up now, you would say that it's going against its seasonal pattern. I wouldn't be sitting here losing a ton of money because I'm still selling it. You know, that's if the chart isn't in line with its seasonal pattern, and that will happen. Then I'm just not going to make trading decision based off the seasonal pattern. If the chart is in line with the seasonal pattern, which gold is, then I will look to continue that seasonal pattern for as long as that period lasts. But if it's showing you that it's not following a seasonal pattern, I'm not going to buy gold on the 10th just because it says it on the seasonal chart. So I think in terms of if you're thinking about in terms of accuracy, you're probably not looking at it in the right way.
Let me ask you a
Makes sense. Hopefully it makes.
I think it does make sense. So when the seasonal pattern lines up with what you're seeing on the chart, you trade, and when the seasonal pattern doesn't line up with what you see on the chart, you don't trade. Really, which is similar to almost anything you do in trading, right? If it's fulfilling your criteria, you should trade, and if it's not fulfilling your criteria, you shouldn't trade, right? That's exactly the same. And it's not that anything in trading is the holy grail, right? What we're looking to do is, if the seasonal says it's going up and it's going up, all that really means for you is that you're not taking any shorts, right? You're looking for good longs, but you're not taking shorts, and that saves you from taking some trades that would otherwise potentially over time that you suggest that are going to lose.
I would say that the big help to the majority of people, certainly to me whenever I started, is it will keep you out of more losers than actually get you into more winners, because it'll improve, massively improve my market selection. I was able to dump so much rubbish. So just the very fact I was able to dump rubbish meant that I made more money. It actually took time for me to, get a bit more ballsy and enter the market a little bit earlier than what I maybe would have prior to that. I would have, in my early days, I would have waited for confirmed trend and etc. I know maybe a part of the seasonal move was already gone at that stage. Now I've evolved further or down the track, and I'm getting in earlier to anticipate the seasonal move. So it took more to get to that stage because you're starting to get a lot more aggressive in trading as well. But early days, it was definitely a case of it cut out so much crap. Losing trades were cut down for me, and that's what you generally see as well when I speak to people that are using it, is they trade less rubbish.
So it used to be 5 winners, 5 losers, and now it's 5 winners, 3 losers. You don't take 10 trades anymore, you take 8 trades, and 2 losers disappear, and all of a sudden you've made a bit more money.
It makes a huge difference. If you only ever take the same number of winners, but you actually cut your losers in half, it makes a huge difference to what you're doing.
Man, I think you don't need to be good at maths to understand that, right? If you could take away half your losers per month for the last 3 or 4 months, how good were your trading results? I mean, how good were you? Look, if you can take away half your losers for the last 3 or 4 months and your trading results don't look great, we have another conversation to have, because that would be kind of unusual. But wow, okay, Ray. So, so it's not that it's 100% accurate. It's about that when it lines up, it lines up. So, does seasonal trading take some patience?
Does it take patience?
Is there something for you to trade every week, Ray, or is there some weeks where you look at the market and just go, hey, it's just not lined up. I'm not trading this week.
The bias will always be there. Say the bias for gold has been generally short from about early September, or quite. It's not aggressively short. It's just it's exactly what we're doing right now. It's a slow grind lower is what gold typically does through September, October, and into November. So that bias is there for 3 months. So that doesn't, the seasonal bias doesn't change from week to week. Can I get a trade short, multiple trades short in there? That will depend on how the structure and how you actually want to trade. I'm not a huge fan of trading ranges. And whilst gold fast around in some of those ranges, I tend to leave them. But that's personal preference, just what you like to trade. But yeah, say the bias doesn't change from week to week. It's there, and it keeps me out of maybe getting into trades prematurely.
Look, we've talked a lot about gold, but foreign exchange, do different currencies have different seasons as well?
Yes, definitely. A couple of them, likes of Aussie, has similar periods to gold actually. But the main difference between natural markets, or things that are dug out of their ground to a certain extent, your financial markets tend to have shorter periods but more frequently. So like if you think gold will have a couple of major rallies in the year,
Yeah.
not many periods into declines. Most commodities will have two periods of the year, a really strong bullish period and quite a strong bearish period. Financial markets will have maybe 3 or 4 throughout the year, strong periods, but they last a lot. They're shorter. They're typically maybe 3 to 4 weeks, or maybe to 6 weeks, whereas the commodities might be 3 or 4 months.
Right, you're going to be back on New Opportunities Expo on the Saturday night. I think it's 7 o'clock. And you're going to be going into a bit more details, charts, talking about seasonality, giving guys an opportunity to join a program and learn seasonality with some supplied data. I think that the next question from mine is, do you ever trade against seasonal patterns?
There'd be 12. Yes, on certain scenarios. We've mentioned COT a few times. The two main data sets as such that I would look at off chart, seasonality and COT. COT would supersede the seasonality. COT tells me what's going on right now, and so it's a more accurate reflection of what's likely to happen right now, whereas seasonality is a study of what a market has done over time. The ideal scenario is that they both line up. And say we've talked about gold at the moment; they are both lining up, but suggests that we still go lower, and seasonality suggests we still go lower, so that's fine. But if gold was saying, or the gold COT data, for example, was saying it's a raging buy, there's huge accumulation coming into gold, and we're expecting a rally in here, then yes, I would be following the COT data. It's live. It's what's happening right now. Conditions maybe have changed, and they're buying it now, so therefore I would buy. And the other times that I wouldn't follow the seasonal pattern is if the market just simply wasn't following the seasonal chart. If you look back over the last 3 to 6 months on the chart and compared that with a seasonal pattern, and if it wasn't following it, then obviously I need to trade what it's currently doing. But it will surprise you the amount of markets that do follow patterns at any different points through the year. It's a lot more common than what you would think. Despite like elections and vaccines and things like that, that noise, the markets are a lot more predictable.
Yeah, I think that's really interesting, isn't it? That I think sometimes some of the stuff is a lot simpler than we expect it to be, and markets do have cycles, and they are reasonably. And again, I like this thing about it's not always perfect, but when it's lined up, it's lined up. And this is the whole thing: when it's lined up in anything, you're going to be trading. When it's not lined up, you want to have a break. Okay, Ray, I really like where we are with this. We're going to do a couple of things. We're going to open up the floor for questions. We're going to do a giveaway. We're going to give away 1 month of seasonal data. Now, we're not going to start that 1 month until the 1st of December. So we've got the new seasonal web page up and running for these guys. So you can have 1 month of seasonal data for the winner of the competition. First, we're going to answer any questions. I'm going to ask Mai to let me know how long I'm on for tonight. I think I've got a little bit longer I can do. So I might run, what we might do is answer any questions. We'll do the prize draw so that those that are here for Ray can be part of that prize draw and get the chance to win the seasonal data. Then I might talk a little bit about New Opportunity Expo for 5 or 10 minutes before I wrap her up. I think I've got for about 10 past today before I need to be out for Orlando and Ash, who are and a little bit later on before the UK show tonight. So if you have any questions, pop them in the questions box. I know we've had a lot during the session. Not many coming in right now. So if you have any questions on seasonality or questions for Ray, please pop them in the box. How much time a week do you spend trading, Ray?
How much time? Oh,
actually, how much time?
Not an awful lot. I don't sit at the charts day in day, for 7-8 hours a day.
Yep. Are you how much time do you spend preparing your bias, and how much time do you spend acting on your bias, making the trades?
It would be 90-10, as in 90% I spend time working out, what my bias is, what the plan is, and then 10% actually doing it.
And what sort of time frame? What sort of time frame charts are you trading on at the moment?
As I mentioned there earlier, that I try to be aggressive even with a seasonal move if I can see the price action is right. So I might be looking to get into a market. And, so when you talk about seasonality, people think you're getting in and you're staying. Oh, you're taking one trade and you're staying in it for 6 weeks or a month. I still trade intraday. I will take intraday trades as well. And if I can see if I can get an entry in on a 15-minute chart into a seasonal move, I'll take it. If it's an end of day entry, it's an end of day entry. It's a case of what the chart is doing at that point. Where's the most efficient entry I can get in? But the safest and most efficient. And if it's on the 15 minutes, the 15. If it's a daily, it's the daily. If I stay in for 6 weeks, fantastic. If I'm in for 6 days, that's the nature of it as well. But I don't just trade the seasonal pattern and I want to stay in for 6 weeks. I do still intraday trade, but that bias still gives me the understanding of what that market's doing at that for that period. I'll take an intraday trade. I'll still do it like that. So I vary time frames. I generally, if I'm trading intraday, it'll be the 15-minute chart. If I'm trying to be aggressive into a longer term move, I'll still try and use a 15-minute chart. It's a time frame I quite like. We all have personal preferences, whether it's an hourly or 4 hourly. I'm not a huge fan of those charts. So it's personal preference. 15 would probably be my most common.
Nice, mate. Mate, a couple of questions here for you. Does seasonal data show strength of one currency or pairs? Like, will it say euro dollar strong but pound US dollar weak?
Yes.
And what's the best asset for seasonal trading for beginners, including FX pairs, asset, and gold?
Oh, what's the best one to start with? Probably gold. I would start with a market. Most people are generally familiar with gold. I would start with something that you're familiar with. Something that you're familiar with the price action of that market and how it generally moves, because as I said, that's an important part whenever you're applying a seasonal pattern. So something like gold or maybe euro, and those should be an easy place to start. But I would never say to someone just to look at one, but if you want to, either gold or euro probably would be a good place to start.
Look, it's one of those things, guys. I don't think you need to rush into seasonality today. Ray will be in on the New Opportunities Expo talking about seasonality. There'll be a little program after that as well, which includes a bit of access to data and those kind of things. So, now's the time to sort of have a look at your trading and see what your goals are. I think it's always interesting. I really think it's, have a look at your trading record and take out one loss a week and see how different your trading record looks. And that's what seasonality is about. It's about taking out the one loss. And you don't need to rush it. You need to find your opportunity and become good at it. Mate, next question. What did he mean by financial markets have good periods 3 to 4 times? Is that referring to particular currency pairs or indices? Guys, I've got a bit of interference in the sound here. Do you guys have that as well?
On my side.
You okay? Whatever it was, I think it's gone, so I think we're okay.
Okay.
Okay, lots of guys saying this sounds okay. No, everyone's like, it was just me. 3 to 4 times, is that referring to particular currency pairs or indices?
Mostly currencies. Currencies have shorter periods, but can be quite aggressive. Pound, for example, if you period from March and April is typically really, really strong. August is typically quite aggressive, quite weak, as is May. So the more frequent changes, seasonal changes in direction. Whereas, you say, if you look at gold, if you talked about gold and the trade that was taken at Christmas is generally seasonally bullish from about the 10th of December and typically can run through till about mid to latter part of February. So you're looking at a fair window there. That's more common in commodity markets, whereas the currencies will be more seasonally bullish or bearish, maybe over a period of 4 to 6 weeks. And they're more frequent. So shorter periods more frequent, and commodities less and longer.
Cheers, Ray. Thank you for that. Might the Aussie dollar move up alongside gold going up through the possible seasonal buy December, February? Does this sense? I think it does sense. Is it likely that the Aussie dollar will go up alongside gold during
December, the December part of it? Yes, from about mid-December. It doesn't typically run as far through. I need to just check that to double check. But in terms of the starting point, yes, it was quite similar there in the middle of December.
But I've got a left field question for you. It really is a bit out there, just to check with you. Do cryptocurrencies have any seasonality?
It's interesting. It's something I've been looking at. It's not as easy to get data. I'm not sure if you're aware, but there is actually COT data for Bitcoin.
Oh, really?
And it's something I've been looking at and following. It's quite unique because we don't really have commercials.
Yes.
And it's interesting. There are actually a tiny number of trades each week recorded in the COT which are put down as commercial. I'm not quite sure who the commercial is in the crypto market, but there's a tiny number in there. Generally, the majority or the most trades are on the non-reportable and your non-commercial, which is seen as your speculative side. So it's got its own characteristics. There is a seasonal pattern to it. We don't obviously it's not as around as long as what a lot of our other markets are, so we don't have the same history to go on. But there is a seasonal pattern. The COT data is interesting because it's very unique, but it is there and we can track it. So yeah, I expect Bitcoin and will behave exactly like any other market. It's traded by the same people. So I don't expect it to be massively different from any of the rest.
Interesting to see whether it tops out at Christmas again. It's got a pretty big historical fall in January from what I remember. Mate, with commodities, I expect it follows harvest, like with corn, wheat, coffee, etc. Platinum, palladium, nickel, copper, zinc, etc. harder to figure. Well, we don't figure it, right? We buy some seasonal charts and they tell us, right?
Yes. So in terms of the things like corn and wheat, most people understand that in terms of being seasonal, and they generally would have a strong bullish period generally around the planting, and then come to harvest, and you have that actually the bearish period. So you've got those two boom and bust sort of in the cycle, and then in between times is quite partial or quite typically range. So that is common with those types of markets. You get into the metals, these different slightly characteristics. Palladium and platinum. Platinum is similar to gold and silver, quite similar. Palladium is completely different, but they all have the patterns. Copper's a really good one actually in terms of seasonal patterns. So they all have differences in the characteristics of how they move, but they all have their own patterns, and they're all tradable exactly the same. I don't look at one seasonal pattern and say, well, oh, this is the palladium one and this one's the corn one, so I'm going to trade them differently and such. It's I will evaluate each market exactly the same regardless of what it is.
Mate, a few more questions coming along. I can see Justin's in the room with a question, and Simon's around as well. Nice to have some of the guys from Bali in for this conversation. Thank you. What research materials do you suggest to read for gold seasonality? Also, what time period of charts to read to understand the seasonality? Is it daily?
Yes, in terms of the pattern, I would look at the daily chart to actually follow, because the cycles and the movement that you'll see on the seasonal pattern or the seasonal chart, it'll be in line with what you understand, obviously, from the daily. So that's where I would look to see and I'd use that. Step one would always be to confirm, is it following the seasonal pattern? But once you say, when you're doing it and you're in the groove, I don't have to evaluate the chart every day when I look at it. Is it following the seasonal pattern? It's a continuous thing. Most charts, especially the major ones that I look at, you'll remember what the seasonal pattern is. It just becomes part of what you do. And I don't actually spend that much time looking at the seasonal charts, constantly, because you remember what the main ones are. So But in terms of starting off, yes, looking at the daily chart, comparing it to the seasonal chart, confirming that it is actually following the seasonal pattern will be step one before making a decision based on that.
Right, from Justin, the 50 billion buy from Square should be a commercial buy in Bitcoin. As soon as you say Bitcoin, there's always a bit of stuff comes in. The $50 billion buy from Square should be a commercial buy in Bitcoin. I didn't even know that Shapes could buy and sell things. Never mind $50 billion. I've got no idea what Square is, but apparently they've got $50 billion worth of Bitcoin.
Pretty sure there isn't 50 billion shown in COT data on the commercial side.
Is Bitcoin seasonal on your website?
No.
Is it going to be, Ray?
It's yes, it's in my head currently. It's an Excel file as it stands at the moment. The reason why I haven't added it on is just trying to work out what it's doing, particularly the COT, because it's unique in terms of we don't have the commercial side. So trying to work out at the moment, it actually seems like the non-commercials are behaving like you would understand of a normal commercial market.
Justin, by the way, says that's million, not billion, for the Square thing.
Right. Okay. I can check it on. No, and plus we've only got, is it 2 years worth of data in there, so it's a case of tracking it to make sure is it doing what you think it to do. There's some really interesting and unique points from the COT data particularly. But when you can see the data, you can actually see, transfer that onto the chart. And so definitely there's unique patterns in terms of the COT for crypto, but they're readable the same way as any other markets are, if that makes sense.
Got a couple of recent prize winners. It might be our last two prize winners asking questions next. From Crystal, Bitcoin on CMM reports since mid-May when big boys started buying. Okay. Helen saying that aluminium is interesting because of COVID masks. This is probably true, but perhaps not a seasonal thing. I'm not sure. I'm personally hoping that COVID masks don't become a seasonal thing. I'm hoping they're going to disappear from the world pretty quickly. Guys, we've had Ray in for just an hour. He's our first return guest on Meet Your Trading Expert free. Welcome, and thank you very much for that, Ray. Thanks for coming in a second time. I know we've had a session with you on COT, and nice to get the seasonal stuff done as well. We'll see you again on Saturday week at 7 o'clock. So I didn't catch it. Is it Comtrade where we can understand commercial trade info? Look, if you're looking for COT data, commemorative traders data, you can contact us and we can help you out with some COT data directly. We can get that for you. Or you can search it online, but we have a charted platform which will tell you that in a chart form as opposed to a data form. And there'll be more of that not far away. Look, I think, guys, if there's any more questions for Ray, we'll hang around another minute and see if any more questions go into the questions box. Then Maya will come out and we'll do the draw for 1 month of seasonal data. And after that, again, I'm happy to go through a little bit of the stuff around the expo, answer any questions you guys have got on that. It's always nice to do that kind of stuff when I get a chance to come out. So we will do, first of all, any more questions for Ray. Then we'll do the draw with Mai. Then I'll answer any questions you guys have got on the New Opportunities Expo. Now, I don't know if while I've been talking, the website's been updated. There are some interesting changes to the website, some couple of extra speakers that are pretty interesting. So I'll talk a little bit about that. I'll give you guys a bit more idea on the real timetable. Talk a bit about the affiliate stuff as well. If we've got some time, I think Mike kicked me off about 1:15 today. No more questions. So Mike, can we do a prize draw, please? I do want people who are here for the seasonals to be able to do the prize draw. And if they don't want to stay, they can go. And if they do want to stay, they can stay and we'll talk New Opportunities Expo. In fact, if you could, just put that link in for people who want to have a look at the website, if you could do that for me. And then we could share, we could do the prize draw. That would be great. So there's the link for those that want to have a look at the New Opportunities Expo. And now, Mai, let's have a prize draw. We've got a few in the room today. Let's see if we can find a winner. Rightio. So here we go. We're going to click to spin. Now you've got to be in the room to win. So even if you are the winner, we're going to ask you if you're here. You've got to answer the question. Justin. Oh, I thought Justin Ho was going to win it. Justin N won it. Justin N, are you in the room? Please, if you're in the room, if you could say something in the chat so we can see you. And we will organise for you 1 month of COT data for you guys from the start of December. I can't see anything in the chat from Justin, so I'm just going to have a look through the attendee list. Mike, can you have a look through the attendee list as well? See if we can find Justin in. Is he in? Yes, he is. Justin in. Okay. Look, honestly, I'm going to give you, I can see you're still here, Justin, but you've got to say in the chat room that you're here. Otherwise, you could have the screen minimized and not be listening to us. So, that was really weird. I've got a message from Dennis saying that he's Justin. I found that hard to follow. Dennis, I'm going to presume that you're not really Dennis, are you really Justin or you're not Justin? Why would you be yeah, I thought that might be the case. Look, I'm going to do it for the first time ever in Meet Your Trading Experts Live. We're going to do a redraw because I don't have a reply from Justin in. So we're going to see if we can find a winner who's in the room. You get some reward. It was worth a try. Yes, that's you, Justin. Yep, that's you. I now have a question from Justin asking if it's him. Look, Justin, we don't read out your surnames on social media. We just use the initial, if you don't mind, just for people's privacy. So I do have a note from Justin that he is the winner. Maybe he was minimized and not listening, but he's turned up now, so we're all good. Justin, you will be the prize winner. We will have have a chat with, get in touch with James. And for the month of December, you will have the seasonal data available to you, which will include the seasonal data for the dates of gold, which is the big trade Ainsley took at the start of the year that set her off on that massive year that you guys have all seen her take. And good work, Justin. Thank you very much. Now, look, guys, I'm here and I'm going to stay around for another 5 minutes if anyone has any questions on the New Opportunities Expo. Ray, you're welcome to stay or go, whatever you prefer to do in the session. Ray, do you have a preference for backgrounds? Do you like that background, or do you like that background?
Maybe say that one, the second one.
Okay. Well, that may well be the official. Look, there was another Justin. This is just his name. Cool, Justin. Look, how can you get seasonal data? Look, we'll have seasonal data available separately from everything else for you guys by the 1st of December. Ray's doing a session on the New Opportunities Expo next Saturday week at 7 p.m. He'll talk you through how you can learn seasonality. He'll do a program on that, and there'll be some data involved in that, and we'll be talking about the data next week. We're not doing the data particularly today because we are really trying to get everybody ready for next week for the New Opportunity Expo. Now, do you guys have any questions? Helen, I have no idea on the answer to that question. How do you continue COT if we signed up? Look, that'll be on subscription, Helen. So if you don't do anything, it'll come out again and you continue access to it. And if otherwise you need to stop it, just contact James for some help with that if you need some help with that. Yeah, if you want to keep the COT data and that's got, don't forget that COT data's got seasonal charts tucked off to the right-hand side as well. And that, so there's COT data there as well. I'm going to share something else on, I'm going to try and share. We'll have a little run through this. We're going to talk about this for the next week or so. We are a few days away from the start of this. So New Opportunities Expo, look, there are better speakers than me. It just happens to be my page you guys are having a look at. Look, we're really looking for people who are looking for new opportunities. We've got some great speakers. click on the link and have a look. I'll be opening it up. Mark Carrington, look, that will, by tomorrow, say half-hour options income strategy. Mark's one of those guys who's not known by anybody really, but he's just a really good trader. I've known him for maybe close to 15 years. I just gave a little contribution. I sponsored him on his bike ride across one of the states of Australia. He was raising money for kids' cancer. Just a cool guy, and a guy who, like many traders, had his battles, but his option strategy, super sharp. Phil will be in talking about fusion. We've got Chris in talking about institutional trading. Look, Nikki Connors is coming in from New Zealand. She's the really the queen of property investing in New Zealand, and Singaporeans are the only offshore people that can buy property in New Zealand and make those returns. She'll be talking about how that works. Justin's coming in to talk about, I think he's going to change his topic to a market overview. I'm expecting to hear that from Justin reasonably soon. So we'll have a new topic for that, but I think he's going to do a market overview. Michael Bourne, this man, his company twice listed in the Forbes top 200 companies under $1 billion. Incredible guy, my net phone. And interesting guy. You can't tell it from here. He's a friend of mine. I often have a meal with him when I'm in Bali. And he's blind in one eye and nearly blind in another, and put this business together. It's not recent. He's had side difficulties since he was a kid, and he's put my net phone together and brought it into a massive company. And here we're talking about overcoming those kind of hardships and how you get on with it. Nick, who helped us to find Angel will be talking about VA blueprint, how to get the right VA. And look, it took me nearly 5 years before I got a VA, and it took me 5 years because I didn't know how to start until Nick helped me to find a VA. He'll be talking about that. I'm looking forward to having George back in the team. He's had a bit of a break for about 18 months now when he sort of rediscovered himself as a trader. He'll be talking about faith-based trading, about trading from a place of faith and belief as opposed to greed and fear. Resh will be in doing the 10 best stocks for the next 10 years. Ainsley will be talking about fund management. I'll be in talking about risk-free Forex trading, Raisin on the seasonal edge, and Orlando on the swing trading. Boy, that's just Saturday. Another full day Sunday. If you've got any questions, let me know. But I'm starting up on Sunday. The Vitron thing's not happening. I'll be talking about creating a trading edge. Lloyd talking about his process for finding stocks. You guys have had Andrew in, one of our most popular speakers. He's doing a recording for this. Got something special lined up with Andrew. He is away that day, so did a recording for it. Penny Smith, Financial Literacy 101. Excuse me. I really feel with COVID in the world that people talk about pivoting. And look, what you want to do is not pivot in the wrong direction. You want to pivot in the right direction. And if you're forced to change what you're doing because of COVID, you need to have some financial literacy. You need to be able to budget. You need to understand how interest rates work. You need to understand how debt works. And she'll be talking about that on the day, and then she'll be doing full follow-up to that as well. Justin's back. Ainsley's back. Julian's in. Julian's going to change his topic. He's talking about Bidenomics, how the Biden success will affect markets going forward. Roscoe Patterson talking about deregulated finance, another crypto speaker. Leon, the chief analyst from one of the banks in Europe, he'll be coming in talking about life of a trader, foundation principles. Look, he's going to touch on modern monetary theory. I think MMT is fascinating. On the one hand, MMT completely insane. On the other hand, makes complete sense. And MMT basically says that governments should just print the money they need to buy what they need, what they want to buy. That there's no need to tax people really. Although tax is good for controlling inflation, but really there's no need for governments to have income. They can literally just print the money they need. And of course they can do that. Shukri will be in on his crypto. Kylie Men's coming in talking about expert to impact. Talking about, and I've seen her do this with a number of people where, people like Ray and I, we didn't just want to be traders. We wanted to be traders and to give back. And that's Kylie's niche, helping people who are passionate about something, finding a way to give back. Ash and Jeff are in to talk about trading buddies. And Peter Davies from Jigsaw will be the last one in. He's one of those guys. Some of these guys are going to offer products. Some of these guys aren't going to offer products. Peter Davies is going to not offer a product. That was interesting. He's going to not offer a product, but boy, he's a man that's got a story to tell on trading. If you get a chance, I would encourage you guys to listen to him. I am trying to find the chat box, which has in the Zoom way hidden away from me. There it is. Rightio, guys. If there's no more questions, I'm going to ask you guys, if you're coming to the Opportunity Expo, register now. There's a bunch of free stuff coming out for you guys. If you sign up for affiliate link and get your friends to join, if they come along and spend any money, we'll give you 20% of their purchase. Perhaps more important, it'd just be great to have them come along. We've got some great speakers, and I really want to fill these rooms up and have those speakers full to speak to the biggest rooms we can possibly organize. Affiliates. Oh yeah, look, and there's lots of giveaways. If you register now, we'll be giving away a number of free products between now and the event. So register now and get yourself in line for that. Ray, any thoughts on the expo before we say goodbye to everybody?
I'm looking forward to it. It's quite a lot of the guys on there I've not heard before. I'll be interested to see and sit through and see what I can pick up. So yeah, looking forward to it.
Yeah, mate, should be an awesome couple of days. And do guys have a look at that timetable, and we'll be updating the timetable. I have a feeling they're doing it as we speak right now. The program might be in the background tidying it up. Pick the ones you want to listen to. Make sure you don't miss Ray. Actually, Ray and I are back-to-back on the Saturday afternoon, so make sure you hang around for that. In fact, I think it goes me, Ray, Orlando. That'll be a pretty good way to finish your Saturday evening before you go and have a beer. We will see you there. There'll be lots more about it in the next week. No, there should be a confirmation email, John, but if it's not coming, I'll talk to Lisa and get it sorted out before I hit the sack tonight. Guys, I'm going to go and hit the sack tonight. Wonderful to have so many of you in the room. Nice to have so many questions today. I think it's a great thing. Ray, once again, thanks for being our first return guest. We really appreciate you coming in and sharing your knowledge. This is what it's all about, is taking this knowledge and giving people a glimpse of the options of how they can be profitable as well. I really do appreciate it. I'll see you on Saturday week. I'll see you guys Sunday night for the market update. In the meantime, guys, just stay calm and make good decisions. And if you do that, trading will work out for you. Cheers, everyone. See you later. Thank you, Mike.
See you guys. Bye now.
Thanks, Ray. See you.